All right, 50 days until tax day, but who's counting, right? If you haven't started the process just yet, there are several mistakes financial experts want you to be aware of.
Friend of the show, financial advisor Adam Powell with the private advisory group out of Redmond reveals the top 3 mistakes and how to avoid making them leading up to that filing deadline on April 15th. I know that one thing that I have heard over the past couple of weeks now that we're in the midst of tax season from a lot of experts is get your federal income tax returns in early because you're more likely to get the return early.
Yes.
Right?
Yep.
Why can maybe filing or maybe rushing to file your taxes, how can that lead to mistakes that might be missed?
Yeah, and they're not purposeful mistakes, I don't believe, right? People, I don't think, are going to file their taxes to make these mistakes, but they do it more in a rush because they're eager to get the return back. Or perhaps they've, have a TurboTax file and they're like adding numbers in as they're receiving information. They see the refund amount they're going to get and they're like, oh, wow, let's get this filed. And you tend to forget about the forms that are delayed. It is becoming more common for some of our important tax documents to arrive mid-February, early March. Yeah, there's a creep happening, if you will. The institutions are required to send you documents, or your employer, for example, by January 31st. But there's other documents that don't have that same timeline. As long as they get you in a reasonable amount of time before filing for the April 15th deadline. So that is a mistake. You get it and you realize, oh, there's more I'm supposed to report. And so then you have to amend your taxes, and it actually creates more work for you than if you had just waited a little bit.
So is it better to probably wait until maybe March or April for us procrastinators?
I do. I'm not going to be a proponent for the night before. But if you're a do-it-yourselfer, then just continue adding the information as it comes in. But it goes back to, I believe, just in my opinion, just having a checklist. What did you file last year? Did you get the bank statement from, I'm just going to choose a random BECU? Did you get it from your institution, your employer, your HSA? All these things you're getting in. Do you have other investments like rentals or other investments where you might get a special filing that maybe won't get to you until April 1st. So just have that checklist, and then you won't make a mistake.
A lot of people, when they're expecting a refund, and especially if it's a large refund, get all excited. You're like, okay, I'm going to get all this money back. Can that lead to some problems or maybe some traps that you don't realize you're going into? Yeah,
particularly if you maybe hear a commercial that might say, hey, I can get you your tax return money early, and people fall into that trap. And, I would be cautious of that. It would be an extreme situation where I would ever feel that was a good idea, because those companies are going to take a cut of your tax return for the benefit of giving you your return early. So avoid that at all costs if you can. The IRS, though they are slow, generally when you do a tax return, you're going to receive it within 21 days.
Fairly quickly.
Yeah, not too bad. So if you can see that large refund or a small refund or whatever it may be, and you can wait the 21 days, just wait 21 days. It's going to get there to you, and you'll be okay. There's rarely a good reason why you'd want to give a company a cut of your tax return for the benefit of an early payout.
Okay, so just wait for that refund to come. Obviously, when you're putting together your taxes, if you do them yourself, or even if you go to a professional, there's a lot of documents that you have to gather. W-2 is always top of mind. But there's some documents that sometimes people forget to gather, and what are some examples of those?
When I mentioned earlier, they're the 1099s, right? And after the 1099 are going to be some letters, I&T for interest, DIV for dividends. Those forms generally get forgotten about. And if you have accounts at various different financial institutions, you're going to receive a 1099, generally, from each one of those institutions. So make sure you receive it. And if you don't, I would take the, maybe 5 to 10 minutes it takes to call them up and just to verify, like, hey, I haven't received my 1099. And they most likely can send it to you as an attachment to your email.
Electronically or something.
Other things people forget are childcare. There's a large child care credits. And so if you don't get those forms from your child care provider and you miss that, you're missing a potential for a larger refund that people are like, oh, I can do that? I'm like, yeah, you can do that. Again, those can generally be caught if you're using a do-yourselfer, like I'm choosing TurboTax in this situation. But definitely your CPA or your tax specialist should be catching those things for you.
Okay, I'm one of those that does the taxes myself, and I'm always worried about making sure that I do everything properly, or
Yeah.
did I miss something, and that's going to lead to the IRS reaching out. What are some of those situations where it might be sort of a red flag for the IRS and they might send out a letter to you?
Right, and I like the way you phrase it, send you a letter. They're not going to send you out something, a threatening letter that's going to be doing this audit. Many times the letters you receive from the IRS are simply inquisitive, and they're saying, hey, there's probably more information you need to provide to us. And what causes those to happen are that you didn't report all of your income that your employer reported, or large jumps in donations would be red flags for the IRS, saying, you know, last year you used the standard deduction and now you've all of a sudden tripled it. You know, why? They might ask you for some supporting documentation. It doesn't mean you've done anything wrong. So those letters sometimes, or maybe many times, are worded that can make you feel uneasy. They're worded that way on purpose. So just get through that uneasy moment. But if you've done nothing wrong, if you truly had a larger donation, or you now maybe are starting using the child care credits, things like that, you've done nothing wrong. You simply reply to the correspondent saying all is in good order.
Give us an example, or maybe is this something that you can do if you're, say for example, you're like myself and you do your taxes by yourself every single year, and you get a letter from the IRS saying we need a little bit more explanation. Can you also reach out to a tax professional or financial professional at that point to sort of help you mitigate whatever questions the IRS might have?
Yep. And if you get those letters, I believe that the next step should be just to get a second opinion.
Okay.
And it's cost is relative.
Yeah.
So I might say, oh, it's going to be worth every ounce that you pay in to have somebody just overlook your numbers to confirm they're accurate. And if they can even look at your previous tax return for just for a little bit more money, and you're like, oh, can make sure, because even tax returns from the previous years, you can make amendments if there's an error in there that's especially in your favor that you're going to want to take advantage of. So, and you know, I'm kind of shooting from the hip, but my own personal experience, it's going to be maybe $150, $200 to have somebody just overlook it for you. And it's well worth it, especially if you get that letter, just to make sure that you've done everything correct.
Yeah, and especially if you're getting more money back than what you anticipated.
Absolutely, yeah.
We all like that.
You'll be a pound wise.
There you go.
Right,
Thank you for the advice, Adam.
You're welcome. Thank you.
Well, you know who doesn't have to worry about doing their taxes for the rest of this year? You, right?
Yeah, I'm done. But what was great was that, you know, I was hearing him say, like, you don't want to do too early because what if you're missing some forms? But my tax preparer sent me a list of everything I would need, and then I went through checklist, boom, 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 send,
Done.
and then they'll done.
Good to have it done, I bet.
Feels really good. I don't have to hunt down some document or find some like obscure thing out there. I've already done that, so now we can just wait and let the process.
I always get stressed out because I wait until like the week before, just like
don't
Kelly
do that
does.
to yourself.
I know, but I do it every time, Kelly.
Don't do it to yourself. But
learn from Kelly. Do it early.
Do it on your weekend. Doesn't that sound like fun?
No.
Don't you want to spend your weekend doing taxes?
No, I don't want to look for that stuff on a weekend.
All right.